Hi, and welcome to this episode of Ask Amy. Today we're talking about something that we're getting a lot of emails about from many of you about homeowners insurance and car insurance. Our guest today is Leash U. He's the owner of Agency U, a partner of Higginbotham Insurance Agency. Thank you so much for coming on to talk with us.
Thank you for having me. Appreciate it.
You're hearing the same thing? Help me?
Yes, help me. It's just, it's a crazy time in the insurance world, and we're getting a lot of help me, what can I do, or Leash, you're the meanest person in the world because you're selling us the insurance. And so, yeah, and I'm happy to help and provide any kind of advice that I can.
Yeah. We want to start with, you said you're seeing the biggest price increases. People are saying, help me, because the cost of homeowners insurance, what we're paying in premiums, is going up. And we kind of expect, I know you've been in the business a long time, you've probably never seen a time where prices decrease for the general population.
No, maybe 1 year out of my 22 years have I seen prices decrease, but right now it's a crazy situation because we're seeing 30% renewal rates year over year over year. This is probably the third year in a row that we're seeing a 30% on average rate increase. And when I was a nationwide exclusive agent back, a few years ago, Nationwide knew exactly when that our clients would leave us without even calling us. And it was about 8.2%. So what they would try to do is increase rates by 8.1% so people wouldn't leave.
So they wouldn't yell mercy.
Wouldn't yell mercy, but now, unapologetically, the carriers are increasing rates 30% year over year. And it's a crazy, crazy situation.
And on the whole, most people think insurance companies, they're just taking the money. Talk a little bit about, if you can, what you're seeing and hearing are the reasons for it, where homeowners are concerned for these rates.
Yeah, so right now it's the craziest situation in the world. It's the insurance market's a mess. What's happening, and the reason the rates are so high and the market is so bad, is because the insurance market has sustained these big record levels of catastrophic claims events. A catastrophic claims event is an event that causes $1 billion of damage or more. And in the decade prior to 2020, we had, so 2010 through 2019, the average year sustained about $38 billion worth of catastrophic claims. So every single year between 2010 and 2019, the average is about $38 billion, let's say. 2020, 2021, and 2022, they sustained an average of $76 billion a year.
Wow.
So about double the prior decade.
Yeah.
And because of that, the carriers are just struggling to stay in business. They're struggling to maintain their financial ratings. And to combat that, there's three things they can do to combat it. Number one, drastically increase rates. Number two, get rid of risks.
Meaning, I'm not even going to renew you.
Yeah, so on my desk right now, there's over 500 clients in my book of business that the carriers have just said, we're not going to renew you this year. And so number one, drastically increase risk. Number two, number one, increase rates. Number two, drastically increase risk. Number three, just stop writing new business or severely limit what comes in from a new business perspective. And so these three things, they can do one, two, or all three of them. And some carriers, they're just trying to stay in business and stay relevant right now. Which
it's really, obviously this is something, if you own a home and you don't own it outright, you're required to have insurance on your home. And it's just a good idea anyway. But I would imagine there are so many people that just can't afford it. At some level, it's just like, hey, I can't pay the mortgage and the insurance. Are you seeing a lot of people that just...
Oh yeah, everybody. That's why everybody's so mad at me right now. Is because I think we passed the point of affordability about 2 years ago. The first rate of 30% increases, the first year of 30% increases, I think we passed that, but we're way beyond that now, and people are just screaming for mercy. What can we do? What are the solutions out there, and what's really going on?
So do you have some solutions? I know you said you have these 500 people sitting there with it that are not being renewed or that they won't renew.
Yeah, so the best thing I can tell people is number one, if you're with a reputable insurance carrier and you're actually getting a renewal right now, you may want to just consider staying with them, because this is the worst time to shop and move. But reputable is kind of a key word. You got to ask your agent, your insurance people, if you're with a reputable insurance carrier. But if you stay with them, the best thing I can tell you to do is increase the deductibles to the most that you are comfortable with paying if you had a disaster happen to your house. And you got to check with your lenders too, because some of the lenders say, hey, 5% is the highest deductible that we'll allow. And so you've got to work with your lender and your insurance agent to figure out, okay, what is the highest deductible that we can get.
And that's just crazy. It's almost like we've come to a point, people have said that about car insurance for a while, but with homeowners, like, just don't file any claims. Don't plan on filing any claims.
Yeah, and it's another reason I'm hated so much, is because people call me and say, hey, I've got this situation, and I always tell them, is it affordable enough for you to write a check and not even let the insurance carrier know? Because when you file a claim, the insurance carriers, it triggers a rate increase. It could trigger a rate increase. It could trigger an issue that says, hey, they filed a claim, we're not going to renew them anymore. And so it's not a good time to file claims either.
Yeah.
And so if my golden rule is, if you can afford to write a check for the issue that just happened to your house or your car, and you're allowed to pay out of pocket, I would pay out of pocket. If
I can afford it after I pay for these higher premiums, right? I mean, it sounds a little bit crazy. But we wanted to talk to you about one thing that homeowners insurance companies look at a lot is your roof. I mean, a big expense in your home, because I came across the same thing last year, because there's like a magic, they don't want to let your roof get older than a certain age.
Yeah.
What is that?
So every carrier is a little different, but if you're already a client and you're being renewed by them, it's typically about 15 to 20 years. If you're trying to buy new insurance right now with a new carrier that you're not a client with, they could say, hey, if your roof is older than 1 year, we're not interested. Most of them look at like maybe a 10-year period of time, but the older the roof gets, the harder it is to insure. And so 15, you're really kind of playing with fire there. 20 plus years, you might as well not even ask almost.
Wow. I mean, that's crazy.
Yeah, you might have to re-roof before you get the new insurance carrier, new insurance company, especially if it's over 20 years. Okay.
All right. We're going to take a quick break, but I feel like there's still a lot more to talk about with homeowners insurance, and a lot of an article recently that got a lot of attention. It was how insurance companies are looking at your homes from the sky.
Yes.
So we're going to talk about that when we come back, what you need to know. We'll take a quick break. Welcome back to this episode of Ask Amy, where we're talking about homeowners and car insurance. We're going to get to car insurance in a minute, but Leisha was talking to us about homeowners insurance, and you said, you're super busy, phones are ringing off the hook, people are emailing, but most of them are saying, oh my gosh, how am I supposed to afford this insurance now, because everybody's increasing prices?
Yeah, then there's different ways of improving your situation, but the number one thing that I would say again is increase your deductibles. Now, I understand everybody wants to shop their insurance, but again, I'd be very careful in shopping right now if you're with a reputable carrier. But I would work with your insurance professional to make sure it's a good time to shop, or if you should shop. But if you do shop, I would only move to reputable carriers that you know, right? Right now, the smaller carriers are in play, and if they're selling at 50% of your current rate, I think something's wrong, because the math is the math. We're all insuring the same things in the area. And if somebody's offering you a policy that's 50% less, something's missing, and you've got to worry about what is missing out of that situation, and if they're going to be around to actually cover a claim if you had a claim.
Right, because that's unfortunate if you're paying your premium. What happens, Leisha? I'm curious, if I'm paying my claims to a company, and then like you said, a lot of these companies, a lot of them have gone out of business, what happens to the money that I've paid in? in?
It's gone. It's
Really?
basically gone. Yeah. And so the carriers that are out there, they're standard admitted carriers. The state of Texas acknowledges them as an insurance carrier. If you purchased one of those policies and they go out of business during the next storm, and you actually have a claim on your house, the state of Texas will guarantee a certain amount of money to help fix your house, even though the carrier's out of business. Some of the carriers that are out there are non-admitted, not regulated by the state of Texas, and so if they go out of business during the next storm, not only is your money, the premiums gone that you've paid them, but you won't get any support on your claim as well. So just be real careful, work with your insurance person on that.
That would be awful. And where can I check as I'm shopping around that a company is admitted versus non-admitted in the state of Texas?
You kind of have to know what you're looking for on the declarations page, but the best way is just to ask your insurance professional.
Yeah, and just so that we know, because we always tell people shop around, and we've done stories with you before as a broker to say shop around. I want to make clear that if I do, so say I get my renewal and they say, oh, it's double, and I'm like, oh, yay. I mean, I could call you, I could call other insurance companies. Nothing, my current company is not going to know that I'm looking for other rates and somehow penalize me for that.
They're not going to know. They have no idea. But again, I would just be very prudent when you get the new rate, a new carrier, and just work with your insurance professional to ask them, is this worth me moving right now, or should I just stay put? Most of the time, I tell people, again, if they're with a reputable person or carrier, I'd tell them to stay put, because it's an awful time. We've moved people because they didn't like their rate, the new carrier that goes out of business, or they non-renew you. And then when they non-renew you and you try to go back, they're not going to bring you.
That's exactly, so yeah, exactly what you were just saying in the commercial break is that, so say insurance company, my current one, says they're raising my rates, and then my broker or somebody or myself, I'm able to find this lower rate. I go with them, and then they close, and I'm like, oh, that's okay. I'll just go back to these other guys.
Yeah.
And they're not going to take me.
They're not going to take you, because that bullet number 2, trying to get rid of risk, they're all trying to get rid of risk right now. And
yeah.
So they're kind of happy that you're leaving.
And so the reason that they may be increasing a lot of our rates is because it's a way to not non-renew me. It's a way to get me to leave.
That is one of the theories, yes.
Yeah.
They're trying to get you to leave, but they're also just trying to stay in the game and make a little bit of money. And we do want the insurance carriers to make a little bit of money, just so they can stay in business, and so we have a solution when we buy a new house or when our renewal rates are high.
Right. So let's talk about, before we went to break, we mentioned that everybody's talking now about, they've been using drones for quite some time to look at our roof and stuff, but you mentioned this whole satellite imagery, or what's different or new about that?
Yeah, so about 10 years ago, I went to this insurance convention, and they talked about this real new technology. Hey, these insurance carriers are going to start looking at the top of your roofs from satellites, and being able to look at the quality of the roof, but then how many trees are around your roof. And so they're looking for certain things like the maintenance of your roof. Is it stained? I don't know if the resolution on these satellite images are good enough to show the curling of shingles, but they can definitely spot holes and damage. But they're looking at all kinds of things right now from the satellite images of whether or not they want to insure your roof. And so you could have a brand new roof within the last 5 years, but the satellite imagery that shows that, hey, this roof doesn't look good, and that satellite image will tell the insurance carrier, hey, we shouldn't insure this house. And so it's a crazy situation right now.
I mean, are those like bots? I mean, I would imagine in some companies they put this satellite imagery through some sort of computer system that tells them, nope, doesn't pass.
Yeah, I don't know exactly what it is. I actually think it's just a picture of the roof, and it's pretty real. It's not real time, but it's not very far back in the past, because I got a new truck recently, and I looked up my roof in one of these systems, and my new truck is sitting out on the driveway.
Oh wow!
And so it was a pretty new photograph of my house.
Wow.
So it was.
And so have you had any success with customers appealing when an insurance carrier says, no, we're not renewing you, or you don't qualify, maybe they use one of these satellite images and for some reason they say we don't want to cover you. can I, as a homeowner, say, oh, but would you consider this, this, and this?
Yeah, that's a great question. So most of the time, the carriers, they'll tell us the reason why we're not doing this is because this satellite image shows that this roof is in not good condition, and there's trees leaning on the house. And so the homeowner can choose to cut the trees down, trim them really far back, spray the roof down with algicide, and do another roof inspection. Sometimes the carriers will take the updated roof inspection that's up close and personal versus a satellite image.
Got it. I mean, and this is where maybe using a broker, but using a broker could help, because there may be more open communication instead of you just calling a customer service number to try to talk to somebody about that.
100%. I always think that clients should have a professional insurance person instead of calling the insurance carrier direct, because there's no advocacy when you call them direct. Use a personal insurance agent any time that you can. I mean, that's the best advice I can give anybody. Find somebody that you like and trust.
So number of trees is an issue, like how close they are to your roof. I mean, we always hear, obviously, just because you don't want a tree falling on your roof, to keep them trimmed anyway, but I don't know that anybody thought about your insurance company seeing you as more risky because you have these big, beautiful tree limbs over your house. Oh
yeah, they definitely see you as more risky if you have trees overhanging your house. Usually before this kind of crazy time, as long as the trees weren't touching and rubbing against your roof, you trim those back, that was okay. But now, if it's leaning, or if you just have trees that are overhanging your roof, even though they're not touching, it could be problematic.
Yeah. Sure. Wow. Anything else we can do? I want to talk about, when we come back, about making yourself less risky. And we can talk about that for homeowners. And we realize we haven't talked about car insurance yet. We're going to do that in our next thing. But just in terms of home, besides trimming the trees, is there anything else that you can think of that makes me look like less of a liability? Well,
I would just absolutely make sure the home is properly maintained. No rotten wood, no broken windows, your foundation's not leaning and things of that nature. But one of the hottest topics right now is getting an automatic water shutoff valve installed in your home that detects water leaks and will shut the water off if it does detect a leak. And that's kind of the hottest thing. If you have one of those, you're even more likely to get insurance with a carrier, even if you had a water claim.
We can link to that. I have one of those, and it ties right into all those water segments I've been doing. You can actually install those yourself on your home if you're handy.
Yeah.
Okay, when we come back, we are going to talk about car insurance and then things that you can do, things that are in your control to make yourself less risky and maybe get lower premiums. We'll be right back. Welcome back to Ask Amy. Today we're talking with Leash U about homeowners insurance and auto insurance. We've spent the last two segments focusing on homeowners. So let's talk about cars. Again, we're a huge commuter city. Everybody has to have a car. Everybody legally has to have auto insurance. But the price of that is also going up. You said not as significant as homeowners, but still.
Yeah, really the auto insurance market, it's matured a little bit in the last few years. So we're not seeing the crazy jumps unless you file claims.
Unless you use the insurance.
Yeah, if you're using your insurance, expect pretty drastic increases for you. And that's why I always tell people, if you can pay out of pocket, if the person that you hit or the thing that you hit allows you to pay for your own damages, try to do that first if you could afford it, because you just don't want to get into that situation.
I mean, it is so frustrating. I read something, and this was from Forbes, and this was a national number, so I don't know if you know of anything more local to Texas. It said like 1 out of every 7 drivers does not have car insurance.
Yeah, so locally it's more like 1 out of every 4 drivers.
I would think so. I just thought that sounded high.
Yeah, and it's the number is pretty accurate, because it seems like every 3rd or 4th person that calls me, hey, I just got hit. Oh, by the way, they don't have insurance.
Yeah,
so it doesn't surprise me in the city of Houston right now.
And so are there some things when people are renewing their car insurance, things that make a difference to the car insurance companies when it comes to giving you a lower or a higher rate?
So the hottest thing right now is this thing called telematics, as far as getting a discount when you're shopping, or if you're with a current carrier and you're trying to reduce your rates. The first thing, just like homeowners insurance, I would crank the deductibles to the highest amount that's comfortable for you, that makes sense from a math perspective as well. But then also consider the telematics thing. thing. But the telematics thing, most people don't like it, me as well.
Right.
I don't like, an app on my phone that's tracking, what time I'm leaving, where I'm going, how hard I'm accelerating,
right.
I'm braking, how fast I'm accelerating. I don't want people to know how many miles I'm driving.
Right.
But it could be worth a lot of money in discounts just to start it. And if you are actually a good driver, it can continue to lower your rates.
Yeah.
And the carriers are really hot on this topic right now. So I would consider it if you're looking for ways to lower your cost.
I did it, and I'm a better driver than I thought I was.
Yeah.
I mean, when I look at it'll have your, last few drives, you can go in the app and see it. I'm like, oh, really? And you also see that, the insurance companies would probably tell you what things they're looking at when you drive that make your score lower.
Yeah, and they are. It's the things, how much you're driving, what time you're leaving. If you're leaving at 2 in the morning and coming back at 2:30 or whatever, they're like, where are you going?
Yeah,
that's why I don't want them to know where I'm going. But yes, they will tell you the things that they're looking at. But what scares me is what they're not telling you.
Yes, exactly. I mean, some of them do look at if you're on your phone, like if you're touching your phone while you're driving.
Oh, yeah.
And I've had some instances of people say, but I was using my phone when I'm driving to put in my code to get in my apartment complex because it's tied in, and they would notice that they were getting dinged for that every time they did it.
Yeah, so be careful with that. But another thing that I can tell you besides telematics is the most probably underappreciated thing is bundling your auto insurance with your homeowner's insurance carrier. Like a lot of people like to split them because they can get a better deal with their auto here and a better deal on their home here. But the carriers that have home and auto insurance, they really value the bundling together. And you max out the discounts. It might be a little bit more expensive to split them, but to me personally, it's not worth it. Bundle it together because it's really valued by the insurance carrier. And
we've just spent the last 2 segments talking about the risk with homeowners policies and what can I do to make sure I don't get canceled. And that might be one thing, like if you've given them both lines of business? Yeah,
I think if you give them both lines of business, you are more valued than somebody that just said, "Hey, I only have my autos with this. I only have my home with this insurance carrier. My auto's over here," and you may be a little bit more susceptible to being canceled if you don't show the carrier commitment.
Right.
So I really value that, and I think the carriers understand and appreciate it as well.
Yeah, I mean, I feel like there's a whole lot of things we've talked about here, and the reason that it makes people so upset is because there are so few things that I can do to control the situation, right? Yeah. I mean, the normal things like shopping around that we've talked about may or may not help in this market the way that it is right now.
Yeah, just again, be real careful shopping around right now because you don't want to move to somebody that's just going to chop you and leave you hanging and trying to find a solution.
Yeah. But things we can control, let's talk about that. I mean, I guess the biggest one that we mentioned was your credit.
Yeah, and most people don't understand that the credit has a lot to do with the rate that you're getting on not only your homeowner's insurance, but on your auto insurance as well. The insurance carriers don't really like to talk about it. They call it an insurance score. And I try to describe the insurance score as this black box of parameters that the insurance carriers put your name and your date of birth and your driver's license into, and it spits out a rate. But in this black box is your credit score. It is, and there's all kinds of parameters that are in it that they don't want to tell you what it is because it's secretive. But what they're trying to do is establish how likely you are to file a claim. Right, and if the parameters are out of line, your rates are going to be higher. If their parameters are the things that they want you to look like, your rates are going to be lower.
Because you mentioned that I could have the same exact home as my neighbor, and we could both get completely different scores.
Completely different,
or different premiums, rather. Yeah,
totally different scores that equate to totally different premiums. And people don't understand that they actually do earn their rate. And a lot of it has to do with the prudence of your finances. The more prudent you are with your finances, generally speaking, the lower your rate's going to be.
Yeah.
And an equal thing to credit is how many claims have you already filed. So claims, credit history, big impact on your rate.
Got it. We are almost out of time, but I know that we did a big segment with you, a very informative segment on flood insurance in the past few months. And this isn't about flood insurance, but I wonder if home insurance carriers look at that, and can they know if I have flood insurance, I'm probably a more responsible, less risky person?
They don't really have a way to look unless they ask you to send them proof that you have flood insurance. And there are a couple of carriers that do require flood insurance if you live in the high-risk flood zone. And so it's and actually some carriers will require, if you live in the zone X500, that you also carry flood insurance. And so there's not a way for them to really look at that unless they ask you for it. But I am pleading to the entire city of Houston right now. Flood insurance are expensive. It's really high right now, but I would highly recommend for you to continue to consider flood insurance. The new rates for FEMA have come out, and they came out in 2021. The greater Houston area, we all got big increases on flood insurance. So people are either canceling it or just not purchasing it. Buy flood insurance. It's very important for you to buy flood insurance because you never know when your house is going to flood. Yeah, coming up on what is predicted to be a pretty active, severe weather season. So, Leash, I appreciate your time. We will link you to Agency U with Higginbotham. Thanks so much for coming in. You're always very informative. Thank you so much for having me. Thank you. Have a great day.